Did you know, amid market dips and crashes, Warren Buffett's dividend investments have continued to pay off remarkably? In fact, he's set to receive $5.7 billion in cash dividends just this year.
Wow, that's incredible. It really goes to show the power of dividend investing, doesn't it? So, let's dive into this. What makes dividend stocks so appealing, especially now?
Well, despite their recent lackluster performance compared to growth stocks, dividend stocks can provide a hedge against market turbulence and inflation. For instance, the S&P 500 High Dividend Index is down about 0.76% this year, while the broader S&P 500 is up about 9.88%.
Right, but even with those numbers, it seems like there's more to the story. The key isn't just in the stock price gains, is it?
Exactly. Analysts believe that the real strength of dividend stocks comes out during tough times. Over the past 64 years, dividends dipped for only 6 years, whereas stock prices declined in 18 years. That's quite a telling statistic.
So, what you're saying is that dividends provide a sort of stability, a buffer during those rough market patches.
Exactly. And Warren Buffett is a huge fan of dividend reinvesting and compounding, which have massively contributed to the U.S. stock market return since 1978.
That makes sense. Compounding dividends could turn a $10,000 investment into $1.6 million. No wonder Buffett loves them.
Patience and a keen eye for strong businesses play a big role in this strategy. Buffett doesn't just invest for dividends, he seeks companies that can consistently pay and grow those dividends.
Right, and he looks for businesses that can yield both dividends and stock price gains. Speaking of which, let's talk about his top 5 dividend stocks right now.
At number 5, we've got Chevron Corp. This oil giant has a dividend yield of about 4% and is up 7% year to date. Berkshire Hathaway's stake? A whopping $17.5 billion.
Wow, that's impressive. Next up, number 4 is Coca-Cola Co. Over 6 decades of increasing dividends and a business that's hard to beat. Buffett's got $27.7 billion in Coca-Cola shares.
Exactly. Coca-Cola is a classic case for Buffett. He often talks about its dividends in his annual letters to highlight the power of compounding. Moving to number 3, Bank of America Corp. This one has over a decade of dividend increases and dominates the banking sector. Buffett's stake here is $37 billion.
Bank stocks have always been a solid play for Buffett. And then there's number 2, American Express Company. With a $38.1 billion stake from Berkshire, American Express saw a 17% dividend increase in March 2024 and a 26% share price gain.
Despite fears of a recession impacting consumer spending and revenue, American Express shares rebounded strongly as those fears receded. And finally, number 1 on our list, Apple Inc.
Apple has faced some rough patches with China-related concerns and declining iPhone demand, but Buffett believes in its long-term potential. It remains his biggest holding with a staggering $90.4 billion stake.
Exactly. With potential AI announcements and other growth catalysts, many expect Apple to rebound. It's remarkable how Buffett's patience and strategic investment choices continue to pay off.
Absolutely. This discussion really highlights the value of dividends and why they're such a vital part of the investment strategy, especially in turbulent times. Thanks for these insights, Susie. I'm sure our listeners are taking notes.
Absolutely. And if our listeners want to dive deeper and find a smart platform to learn about investing and strategy development, we'll leave a link in the description below.
Thanks for joining us today. We hope you found this episode enlightening.
Remember to follow or subscribe to hear more from us. This is Susie and Adam, signing off. Goodbye.
Goodbye, everyone.